let's get to the subject of gold. Let's get to the subject of the breakout industry of the week. Who better to chat with than Mark Liebovit? Mark Liebovit is been Timer's Digest Timer of the Year, long-term Timer of the Year, and I'm going to start with his reputation as Gold Timer of the Year. Mark, thanks for taking the time.
Thank you for having me back, Michael. Always a pleasure. Thank you.
Well, more a pleasure for me and the audience. You must be having the hair on the back of your neck stand up when you look at all the action in the gold market. People phoning you saying, Mark, what's going on here? And I'm going to be no different. Mark, what's going on here?
Okay, Mike. Well, I was looking for a correction. We sold our gold stocks and our gold play several weeks ago looking for a correction, and here we have it. So we were looking for a pullback anywhere from 1220 to 1270. We got to 1241, I believe, on Friday. So we're in that area. In fact, we turned up after that low on Friday. So if we get some volume confirmation come Monday or Tuesday, maybe that was the bottom. We'll see. But we're definitely in that buy range. And my overall strategy was to exit, get back in for play now up through the 1375 high up to the mid-1400s. I'm hoping by the end of the year, but maybe into the first quarter. So, of course, a lot has to do with the election and so many variables around the world. You know, we had that flash crash in the British pound Friday morning. We had all kinds of interesting things going on around the world, so a lot of things could trigger it, but that's what the charts say.
You've been Gold Timer, Timer's Digest Gold Timer of the Year. I suspect, given I was well aware of your call in September to say, hey, we're about to take a significant rest, take a break from the gold stocks, take a break from the bullion, and as I say, I suspect you're going to be right back there on that list by the time we finish this year. Mark, you just mentioned some of the variables. What are your sort of trading parameters here? As you say, you had a 1240, 1270 kind of range on it. If we break down, do you have a breakdown number to tell you that the correction may be more harsh?
Well, I guess if we take out 1210, that would start to worry me, and then the next big support number is around that 1175 area. I'm willing to live with it down to, I guess, 1175, and unless something really dramatic changes in the technicals. I think a lot of this is just part and parcel to a normal correction. In fact, a lot of bearish sentiment out there, a lot of discussion how the gold rally is over. I'm a pragmatist. I mean, ultimately, I have to admit I'm wrong at some point. So, but at the moment, this is sort of a predicted event. And like I mentioned a moment ago, I still like to see some upside confirmation here. I like the fact that we reversed off a low on Friday. That was nice. And but the confirmation would come if we got some follow through early next week on upside volume. So if we don't get that, then I'm already in there. We start to do a little nibbling here as well, but I would probably wait until we had some further confirmation of the bottom, and that would come with my what I call volume reversals. Positive volume to the upside in the shares and in the metal futures. So let's see if that unfolds. But I think we're definitely in a time band and a price band to be looking at gold again.
It's must give you further. A lot of times models get into sync with a market. Methodologies. So it must give you some confidence, given that you have predicted this kind of a downturn to these kinds of numbers. It would seem to me to lend a little credence that the models you're using are in touch with this market.
Yeah, I just try to turn off the noise. Michael, I'm just looking at the chart. It was expected, but like I said a moment ago, you got to get confirmation of your prediction. So we had a confirmation of a top. It did come down. In fact, for a very short time, we were actually short gold. We were playing the inverse ETF for a short period of time just to catch a little bit of the downdraft. But now that we're down here, I'm just waiting for some confirmed signal. So that's pretty much it. Pretty simple. We're already nibbling in there. We're in there. Let's see if we get some further confirmation. And I'm pretty confident with all the turmoil in the world. There's so much going on. We can spend an hour on the phone here going over all the problems around the world. I mean, there's all kinds of stuff, everything from worrying what Putin's going to do to, what Yellen's going to do or not do in December. So I think there's a lot of triggers that could take gold higher.
By the way, I don't get the impression, I don't have the data, but I don't get the impression that the Canadian public is aware enough of the kind of tension that's been escalating between the U.S. and Russia over Syria. Announcement yesterday, for example, that Russia has made an agreement to have a permanent base in Syria. The U.S., coming back with John Kerry's statements yesterday, I believe it was, again, outlining the threat that Russia's posing geopolitically. And as you say, that may well have an impact. But I don't get the impression that Canadians are well aware of that.
Well, hopefully we'll get more input on that. One of my good friends, Bill Koenig, who I quote quite a bit in my newsletter, he's a White House correspondent, and he had a little blurb in his newsletter yesterday about, hasn't been confirmed yet, but some Russian submarines were apparently seen off the east coast of the U.S. So, in fact, that it came from him. I'm giving it some credence that there were some rumors floating around the White House or in his vicinity. So there's things happening. Could be very interesting. I admire Putin because he stands for his principles, but at the same time there is that potential conflict between us, no question about it.
Mark Liebovit is my guest. You can find it at vrtrader.com, but you can go to Liebovit News, Liebovit
VR.
VRnewsletters.com. There you go.
It's easier just to go to vrtrader.com. That's easier.
Yeah, that's what I was going to say. I'm going to vrtrader.com for that because there's a lot there. But Mark, I got to take a break before I don't want to short changes because there's something else that you were the pioneer. You and Jim Dines are the only two guys I know going back several years at the World Outlook Conference. You made it very clear. I asked you specifically on the stage, what do you think will be the biggest surprise going forward in the equities? And you said you thought the marijuana stocks, and I had not heard that before. Our audience hadn't heard that before. Well, we had a major breakout this past week in several areas, and here's a teaser. It was thanks to Snoop Dogg. I'll talk to Mark Liebovit about that when we come back right here on the Money Talks Network. I'm talking with the Timers Digest Timer of the Year, former long-term Timer of the Year, and gold market Timer of the Year. They don't have a marijuana Timer of the Year, but you'd get that, Mark, if they were doing it at Timers Digest.
Okay, I hope so. Thank you.
Well, let's go to that. You were, as I say, very early days. You were talking about the trend toward legalization of marijuana, looking at the stocks that were serviced. You warned people that this was a very new industry, so there's going to be a lot of shakeout in it. Are we any further along now, Mark, than we were even 2 years ago at sort of picking out industry leaders, or is it still that level of speculation because it's such a new industry?
Well, it was easy in terms of the Canadian names because these were really the leaders, and the fact that the legal environment is so much more conducive in Canada versus the U.S., so it was really easier picking the names like Canopy and a whole list here. We can go over those that have been doing really well for us here. But you had to be patient. They've had their swings. But I think this current push to the upside, I know it doesn't sound like it should connect or not, but the elections in the U.S. come in 30 days, with California, Arizona, and a few other states possibly legalizing recreational. And, of course, in Canada, that's pending with Trudeau's proposal as well. But I think the U.S. election has added a little bit of an impetus here as well to the interest in the marijuana space. So, again, it was easier for Canada, and I think much of the push, really the issue for many of the companies, as you know, is revenues, but are they making money? And in most instances, there aren't many profits to talk about yet, but, they're all on the cusp of doing that, and, the market always anticipates the future. But the easier names to play, in truth, have been the Canadian names. They were showing more relative strength, and we had a whole bunch of those. And I should also say to your listeners, we rang the register last week because, not to say I'm bearish on them, but we had some huge gains, in some of the stocks. So, a name like Canopy, that I think we paid about $2 for, went up to $4.40. I mean, it doubled. I mean, those kind of plays are awfully attractive if you're taking a trading perspective. And I always try to do that. I try to put out that long-term idea, and we can trade it all the way up. But when you double your money, in some instances triple your money on this stuff, particularly as the investors are jumping in anticipating a positive event, like I say with the election, to me it was a reasonable speculation to take some money off the table here. But we're looking to get back in, so stay tuned.
Of course, you produced the Vice newsletter that covers a wide variety, but it was centered on your idea about the marijuana stocks. I mentioned a moment ago that Snoop Dogg seemed to be the impetus for something like Canopy to really take a jump up. I forget what he's even doing. I mean, Snoop Dogg is no stranger to marijuana.
Right, lending his name to the products. I don't think that was a news story. I thought that had been out for a while, but I heard a lot of celebrities are tying their name to it, whether that's going to help the sales of the products or not. There's a big marijuana convention coming up, actually, in mid-November that I've attended in 2 previous years at the Rio Hotel. It's like the big event, and thousands of people show up, and all the products and companies are there. So I may, for me, I'm based in Phoenix. It's a short drive up there. I'm definitely going to go up and just sort of snoop around. Maybe I'll find Snoop Dogg.
Yeah, exactly. It's just so hard not to be joking about that. You know, it's been a great, as I say, you've led people in from your subscriber base through the Vice letter, you know, into all sorts of fascinating situations. You know, I really loved your theme right away. You said, I'm not sure about the sellers, but I'd love to be part of the supply chain there, because no matter what, they make money, even if the company they sell to in terms of the paraphernalia, in terms of growing and all that stuff, doesn't work out. They've already made their sale. So those companies, is there a leader in that side of the business?
Well, I would say, you know, I would stick with the two blue chips that I like, you know, across the border, you know, going across the U.S. and Canada. I would stick with Canopy. I think that's the blue chip in Canada, and of course, my big favorite, as you probably know, is GW Pharmaceutical, GWPH. Yeah. I mean, we've been so successful with the stock, it sort of, you know, distorts reality. I mean, we were buying the stock within the last 6 months in the 30s, and it opened up $80. 3 days later, after we bought it, made 50 points overnight, and we've been trying to trade this thing all the way up now. It's around $135, and it's going to be bought out. I mean, it's the leading medical marijuana play in the world. They're based in UK. The price sort of tells you what's happening. So some big pharmaceutical company is going to come in there and buy it. So I would suggest, with the trend of where it is internationally, any pullback in GW, I say it's pretty expensive here, around 130. But if it can drop 10 or 20 points, I would definitely take a look at that. I mean, it's probably going to be a $300 stock in the next 3 years if the trend continues.
That's the Vice newsletter, and you can get that at vrtrader.com. Mark, let me shift back to the overall market right now. You mentioned, of course, as we're all focusing on the U.S. presidential election because it's such a different year. If there's anything that people can give Donald Trump tremendous credit for, is he's raised the interest. It started right with the primaries, right with those, you know, GOP debates, now into the public debate. I mean, you look at the ratings, 85 million people or so watched that first debate. The second one is tomorrow night. But let's talk stocks in that side of things. Is this adding an air of uncertainty to the market, or you just ignore that and just watch what the charts are telling you?
Well, this is really exciting. There's a lot of stuff to talk about here. You know, the conventional wisdom states that should Clinton win, then we have a big global rally. If that happens, I'm going to be on the short side because I think it'll be sort of a dream scenario here, a big spike up, and then I think fundamentals are going to set in, particularly with the risk of the Fed raising rates in December. On the other hand, should Trump win, which I'm sort of betting on, the market's going to probably take a nosedive right away because Wall Street's got this misconception that it's bad for stocks if Trump gets in, and we'll talk about that in a moment. At that time, I would be a buyer of stocks if there was a sharp sell-off on his victory, and gold will probably run up $50 or $100 an ounce probably on that event. So if you're positioned, you'll probably make money in gold. So the basic view I have, though, you and I would probably agree on this. We've been around a long time. It really doesn't make a lot of difference who sits in the White House in terms of what the stock market does. I mean, that's really the long-term truth. You go back and see what stocks have done under a Republican and Democratic administration. There's always trading opportunities. So my life and career is not going to depend on who wins in November, though I have other political and social reasons why I would favor one candidate over another. It really doesn't make a heck of a lot of difference, and it's going to provide some great trading opportunities for us, like I just mentioned. So I'm sort of, keeping a lower profile here, and maybe we'll get some signals prior to the actual election day about taking in more positions, but I'm not going to defer from my comment on gold. I'll still be buying that. And as far as stocks are concerned, we may have to wait for the election results in terms of taking that big trade, going short, like I said, on a big rally if Clinton gets in, or buying a big dip if Trump gets in.
Well, it's also, you just alluded to it, it seems that central bankers have taken front and center stage far more than politicians. Yeah, there's the drama and the gossip, and there's everything about the politics side this year in the U.S. election. But beyond that, it's the Federal Reserve that seems to be dominating. I mean, that's what.
Right. It's a worldwide rigged market. We've been talking about this for a long time in my letter. I mean, you've got the look at Japan. I mean, I think Japan owns pieces of 70% of the stocks on the Japanese exchange. You've got the Draghi out there buying corporate bonds. He was talking about buying stocks, but he hasn't done it yet. And even Yellen's talking about buying U.S. stocks. I mean, to do whatever they can to support the markets, keep interest rates low, and whether Yellen goes up a quarter point or not doesn't change the fact the rest of the world is sitting in negative interest rates. And ultimately, I think the U.S. will go to negative interest rates. So it's probably good for stocks, whether will last forever, and how high are we going to go? I mean, there's going to be a bubble here at some point, and hopefully we can take advantage of it. I'm sort of proud of the fact that I've never been caught in a market crash in all the years that I've been in the business. And if one is really coming, Michael, I'm going to catch it, or at least have some warning that something is coming. So just about including the Brexit decline we just had, a lot of the recent sell-offs, the flash crash, I was out of the market or short or saw volume come into the downside, warning of that. So if we're going to go to 40,000 in the Dow and have a big bubble, fine, but I'll be out before the big crash comes.
And I'm glad you're bringing that up, because the track record of VR Forecast or VR Gold, that kind of stuff from the VRTrader.com has been exceptional. I remember very specifically on this show, you warned us that there was going to be a very sharp, strong downward move, and that was just before the flash crash. That's just one example, I know. But just very quickly, Mark, because we've only got about 40 seconds left here. That's the key, it would seem to me, that to use your methodology to avoid any sharp downturn and be prepared if we go up.
I'm always watching the volume. As long as that volume is there, you're watching the smart money, the insiders moving, the big institutions moving, and you see it in the gold market, you see it in the currencies, you see it in stocks, and that's really what tries to keep me intellectually honest here over the years. I do have my prejudices, and no question about it. I'm not perfect, but I try to stay honest to what the signals are telling you.
Well, great stuff as always, Mark. Fascinating to talk with you. I invite people to go to vrtrader.com.